The opinions of this podcast are my own and not necessarily the opinions of Berkshire Hathaway Home Services Ambassador Real Estate, any realtor associations, persons, or entities. If your property is currently listed with a real estate broker, please note that it is not our intention to solicit the offerings of other real estate brokers. All right, folks, we're back. Dylan Dravland back. He's been on the podcast several times, and he told me today before we got rolling that this is the first video podcast. So we're just going for it today. No plan, no script. Dylan and I talk enough that we don't really need one. So Dylan Dravland, Home Loans, by the way, if you didn't pick that up. Why haven't you lowered the rates yet?
That's a great question. And I really wish, contrary to popular belief, some people think us mortgage advisors control the rates.
Even with the rates being higher, I think, and tell me what you think as far as what you see in the market activity. I mean, I can't say I've really personally seen it with the people that I've been working with in kind of my sphere, but I've seen it from other agents, and just seeing it when I'm watching the market is that people are starting to come off the fence, because I think that they're realizing that there's not going to be, there was a lot of talk about interest rates dropping into the end of last year, and then you keep pushing it out into 2025. And now I'm really seeing the consistency, like, hey, we're probably going to be here for a while. And if we go down at all, it's not going to be like significant. And I think that's starting to pull some people off the fence that are like, we've been wanting to do something for the last year and a half, and we've been trying to play it out a little bit, or we've just been a little gun shy. Like, we're not quite ready. We don't want to make that jump. And, the most important thing is the affordability factor is still there. But I think there's people that were able to afford it that were just trying to wait for a more opportune time, and they're finally realizing that it may not come for quite some time. And so they're like, let's just go ahead and do it.
Yeah, I mean, obviously the recency bias of COVID, right? Like, looking historically, we have not seen rates go from jump that high and that quick turnaround time in a very, very long time. So everyone got so used to these 3% mortgage rates. I mean, then they even got to like fives. Like, well, why would I ever buy a house at a 5% interest rate? Man, if they were 5% right now, you'd have people flooding the market.
Yeah.
Right. So I think that's part of it, right? People are realizing, okay, if you wanted my honest opinion, I don't know if we'll ever see 3% again. And although it would definitely benefit our business, right, Blake? I don't think I want to see 3% rates. And people are like, you're blowing smoke. You and I both
agree.
know. Well,
Yeah.
You and I both know what happened when rates were at 3%. Home prices, as a homeowner, it was great, right? Your equity position increased dramatically, right? As a seller, it was awesome. As a buyer, it was a living nightmare, right? As a buyer, it's hard to say, man, the deals that buyers are getting in this market right now with just less competition, right? They don't have to offer 50,000, 40,000 over list. They don't have to waive their home inspection. They can get some seller concessions to cover their closing costs. They can have a home sale contingency now, right? When rates were at 3%, but everyone's so hyper focused on rate. If the rates are low, they think it's the best time to buy. If the rate's high, it's the worst time to buy. We need to shift that mindset, that narrative. That's our job as professionals in this industry, because the rate is the rate, right? Think of, and like you said, people are realizing it, like, hey, we don't want to move for a year and a half. Life happens, right? Either you have kids go off to school, you get a new job, you have to relocate, right? People are going to buy homes regardless. And a lot of it is because they're kind of forced to, right? Hey, we're having, twins. We need more room in our house. Like, we don't really have a choice. Divorce, what? The only really refinances I'm doing right now, obviously with high rates, are divorce situations. But we're still doing refinances because that happens, right? So there are things that happen in life that cause you to buy, sell, refinance, whatever it may be. But I will say, on the rate topic, I look to the way I finished 2024, and I remember within a couple week time span, I locked 3 different rates, one at 5.5, one at 5.625, and one at 5.75. 30-year fix. These aren't a temporary or an arm, or these are a 30-year fixed rate. And all we did
Mm-hmm.
was use seller concessions.
Yeah.
Sellers are getting desperate as their houses are on the market. And again, they probably have to sell for a reason why they're selling in this market, right? Maybe they have to relocate. They need to get their house sold. As a buyer, and as I, have pre-approved buyers out looking at the market and things like that. And if they send me an address of a house that's been on the market for 30 days, I'm instantly like, oh man, this could be a great situation for you to be in.
Yeah. Well, it's interesting you say that. I was going to kind of pull this out later, but I think it it goes to exactly what you're saying, and it's you know when we're out in public, I know I'm sure literally every single time that you go somewhere, someone asks you what are rates, and
Every
people
time.
ask me that question, and they ask me how the market is, and sometimes that's hard to really give them if they want like a real actual answer, I can give it to them, but it's usually just a kind of a courtesy just to ask. They want to kind of know what's going on, so you give them the
Yep.
short answer, and I think it's important to actually look at the data in our area because I just pulled it before the podcast and I was just looking at year to date, and really it's through mid December of 24. So we're not totally up to date, but I'm looking at Douglas County and I'm looking at Pottawatomie County, and for existing homes in Douglas County, um, the days on the market went from 11 days average in 2023 to 14. So it it's not really, if you're looking at the data, it's really not that much different. There is more supply. Supply in Douglas County went up almost 11%. So you get a little more supply when homes stay on the market a little bit longer. You let that inventory build up a little bit, and there is just more coming to the market. But I think what's important too is the average close price went up 6%. So average Douglas County 324.4 in December of 23 to 344.6. So you're still seeing some pretty good growth there. Pottawatomie County, really kind of the same story. Average sell price up 6.6%. The average sale price in Pottawatomie County from 23 was 240 or 241, really, up to 257. So a little bit lower in Pottawatomie County, but about the same growth. Days on the market was longer, 16 and 23, 16 days on the market in 2023 to 22 days in 2024. So, I mean, kind of you're seeing the same thing across counties in about a 6.5% increase in supply. But all in all, not like really bad statistical data there. Like nothing's really that much different. Prices have still gone up. Days on the market haven't changed a whole lot. It's not like we went from 10 days to 40 days. And yeah, we are seeing stuff sit on the market longer. But like I tell people all the time, if you have a good home or you price it correctly, it will sell. The ones that don't sell and that sit on the market for 60 days are the ones that are $30,000 or $40,000 overpriced. Usually, like I'll say like more like 10% overpriced. 30,000 or $40,000 isn't a good metric when you're talking maybe $1 million home, but when you're talking on a 250 or a 350 and you're literally off 10%, then those are the ones that sit and they make a price reduction. Then somebody shows up, gets some seller concessions, gets basically everything that they want because the seller's trying to sell. So I still think, yeah, it's slower, but it's that recency bias. It's like we were so used to things selling in like 2 days, and people are still sticking to that. But I'm like, yeah, I mean, but what if your house sells in 10 days? That's still pretty fast.
I'd say that's really fast. Ask
Yeah.
anyone trying to sell in 2008 how long it took their house to sell.
Yeah. I
So
thankfully I wasn't in the game at that point, but uh I look back at some, look at the MLS, and it's like you look at the days on market and it's like, oh, that was on the market for 185 days.
So, and you know me, I love the numbers, right? Because you and I we think pretty similarly, right? So we're pretty fact driven. The data, like let's actually look at what's going on. Ignore the noise on social media, the doom and gloom that mainstream media is going to give you. Basically, if I could sum up all the stats you just said, I'd probably say this: you're telling me homeowners are still increasing their net worth by owning a home. Is that
Yep.
fair to say?
Yep.
Even though we have the highest mortgage rates we've had in over two couple decades, even though we've seen supply increase, even though we've seen time on market increase. I mean, and you mentioned, and I know this is average sales price. This doesn't really match exactly what appreciation is, but essentially, people's homes values are continuing to go up. They're building wealth for them and their families long term by owning real estate. I think that's really the main what I try and focus on, right?
Yeah.
You always hear the saying, don't ever wait to buy real estate. Buy real estate
And
and
wait.
wait, right?
Yeah.
Um, and obviously when we are, we have to look at what we're comparing those numbers to, right? So you were saying, hey, time, days in the market went from what 10 to 14 or whatever it was. Again, it's recency bias. We're comparing it to times when houses were selling way quicker than they should sell, right?
Yeah.
What is I think a balanced market is 6 months of supply, right? I think that's
Yeah.
what they consider a balanced market. So below that is a seller's market, above that is buyer's market, right? Well,
I think it's actually 90 days is the
is it
tipping point.
90 days? Is that
Yep.
what it is? Okay.
Yep.
But again, if we're going to compare to 3% rates, well, let's compare then to 2007 because all I hear is we're just waiting for the housing market to crash. And I'm like, okay, well, then let's compare right days on market to 2007 to 08. Let's compare homes for sale today to 2000 to 07 and 08. We had over 4 million. And again, I love that you have the local numbers because I'm big on that. Is like, again, the doom and gloom you hear is typically, currently right now, there are some areas down south that are struggling a bit, especially like some Florida areas.
Well, and
Just
that's what you see in the headlines is like you see the percent drops and you're looking at a lot, but those places also saw the biggest increases when things were crazy. People buying vacation homes, Airbnb properties, paying, you know. So it's all in the numbers and how you want
it
to look at it.
it's a correction.
Yeah.
It's the market correcting itself, which isn't great, right? You hear about what's going down in Florida, and not even that it's as bad as people are making it sound. But yes, you are starting to see obviously increase inventory, things like that. People just think it's a recipe for disaster, and I'm like, man, it's just completely different than 2000, 2008. And especially when you look at the economy as a whole, not just the housing market, right? A lot of the things that happened back then with where the employment rate was and all the other economic factors that people don't even consider now.
Yeah.
Um, and then, not to get too off track, but I mean, lending guidelines, right? I mean, look how revamped, I mean, you look at over 80% of borrowers now have interest rate of 5% or less. It is, you have to have more than a pulse to get approved for a mortgage nowadays. Whereas back then you literally, ninja loans, no income, no job, no assets, just sign here.
Yeah.
um, so a lot times have changed, but I mean, I think big picture, right? We could talk numbers all day. Big picture, owning real estate is going to increase your net worth. And that's why I believe in what I do. I love what I do because I do believe I'm putting someone on a better financial path for like them and their family moving
Yeah.
forward.
Well,
Um,
that's a really good point. Just as you're talking, I think there's an important disclaimer, and I know that you agree with me on this, is that, one of the headlines that I hear a lot or you hear people talk about is like, oh, well, it's cheaper to rent now than it is to buy. Where at one point it was like, oh, you could buy, for what you're paying in rent, you could own this house. I'm like, well, you got to factor in, do you have the money for a down payment? All the other things. But I'm starting to hear again, oh, it's cheaper to rent than buy. Well, if you're looking at it strictly on a monthly payment basis, and what are you looking at for down payment? I mean, what all the things you're looking at. I'm like, you first of all, you got to be ready to buy a house. Not everybody's ready to buy a house.
no,
Renting is perfectly fine. That is the disclaimer that I wanted to get out. But if you want to own your own home, And you don't want someone to just call you one day and say, hey, actually, I'm selling this property and you have 30 days to vacate, or you want to have control of your property, or you want to build your net worth. That's where home ownership comes in.
I mean, I literally, a good buddy of mine, his last two rentals, and I just feel awful for him because we even chatted and had a game plan in place. And we had a set timeline in place, which I encourage everyone to do, right? If you haven't spoken with a lender or a realtor, even if you're not looking to wait, buy for 2 years, I love those types of conversations because then when they come back in 2 years, they're so thankful they had that conversation when they did. But anyway, kind of going back to what you were just saying, that reminded me of a buddy of mine. And the last two times, both his last two rental places, he was informed, hey, you have 30 days. I'm selling the house. You're
Yep.
gone. I mean, you talk about, there's something to be said. Yeah, in terms of monthly cash flow right now, for sure, I would say obviously buying a home will have a higher monthly payment. But I like the safety and security of knowing, hey, I always think back, and the last, literally having it happen once is terrible. But the last two places he's lived in for to rent, both times landlord did the same thing. Said, hey, we're selling
Yeah.
the house. You got to go.
Yeah.
And I think it was a 30-day notice. Maybe
Yeah.
a
I mean,
45 one. I don't remember exactly. I'd have to ask him, but
it depends on their agreement. I mean, this is kind of sidebar, but I mean, I have that in place on my rental properties that I just do month to month, because if I ever had to, it's hard enough to get somebody to get out if you had to. I have good
Mhm.
tenants, so I don't have that problem, but it's just a protection for myself. Maybe I'm wrong by doing that, but that's what I've done recently. Is just we're on a month to month basis, and that way, if I have to do something, I have the right to. I have to give you 30 days. Sure, I'm not locked into the, annual lease agreement and know that they're going to be there, but that doesn't really mean anything to me. And, I think in Council Bluffs, I'm not sure what Omaha's stats are, but like I've heard the mayor talk about this several times, is like the vacancy rate for rentals in Council Bluffs is like 1%.
Oh yeah.
And they say that like the homeless, like when you start creating a homeless problem, is at like 8%. So there's nothing to rent. And I mean, I have good tenants, so I'm okay with the current rents that I charge. But I see some of these postings for these houses, and you know, I'm like, and in today's world, if you're an investor and you have a on a commercial loan, you're probably 8% right now. You got to you're trying to cash flow it. There's a certain amount you got to charge. But I mean, I just can't believe the rent prices on some of these properties. I mean, it's unbelievable. And on that note, just like you were saying before, is like you look back to 2007, 2008, you look at prices. I was just talking to um, an investor that owns a lot of single family properties. And she's like, I showed her a property and she couldn't believe that. She's like, man, I just can't believe how the price of this. Like, she's like, I just can't believe. She's like, 5 years ago, this would have been this price. I'm like, yeah, I
Mhm.
know. And she's like, it's just hard for me to wrap my head around it right now. And then also having to pay, potentially 7-8%. And I'm
Mhm.
like, I 100% agree with you. But I said, what are you going to say 5 years from now? Because you've said that you look back at stuff that you bought, 5 or 6 years ago, and you thought it was a lot of money at the time, and you look back, you're like, God, I'm so glad I bought that stuff. And so I just don't really see anything changing significantly unless a lot of things change, where home prices are going to be like it any cheaper than they are now. It's not going to go backwards. We're looking at a simple supply and demand that cannot be fixed in any short amount of time.
Yeah, playing devil's advocate, the only way I could see it is we would have to have a flood, a crazy surplus of inventory to hit the
Yeah.
market because it comes down to Econ 101, supply and demand, what you just hit on, right? I think that would be the only way. But even so, at that point, I just, especially with people locked into those 3% rates, right? Unless they, like we spoke to, unless they absolutely have to, which does happen,
Mm-hmm.
right? Divorce, new job, kids, empty nester, whatever it may be. That those things happen, but because of the lock-in effect, we call it, it's hard to see what would cause a crazy amount of inventory to flood the market, right? Now, again, playing devil's advocate, I'll play the other side. You could say, okay, well, the economy hits a recession. Wouldn't that people lose jobs and whatnot? And again, you look historically at recessions, and home prices have either gone up or remained the same even through recessions and hard recessions. The only outlier to that is 2008 when the housing market collapse caused the recession. It wasn't a recession causing the market
Yeah.
to collapse, right? So
Yeah.
people kind of get that confused. But, you know, that is one thing I do think about is, what happens. There are some signs that there could be recessionary indicators, I'll say, in the next couple of years. I've also thought that maybe for the last 2 years, and we haven't, I guess, what they won't label it a recession. So whatever you want to take that with a grain of salt. But, so that's one thing that people will say is, hey, as a recession, people lose their jobs. They can't afford their house. They sell it. That sparks supply. That leads to a housing market crash. And I go, well,
Hmm.
this wouldn't be our first recession. Historically, we go through a recession every 7 years. And if you look at the last 80 years, real estate has had a record of 73-7.
Yeah.
73 wins, 7 losses. In those 4 loss years, all 4 of those 7 of those 80 came between 2008 and 11, I believe it is. So, long term. And again, we could talk facts all day, but we talked about, okay, if your mortgage is a little more than your rent, the average net, this is a mind blowing stat to me, but the average net worth of someone who owns a home versus renting is 40x, 40 times greater on average. I mean, that to me is like, holy smokes.
Yeah.
And another thing that reminds me of is a lot of the borrowers I'm helping today, and maybe you can relate to this, they wouldn't be able to buy the nicer, bigger homes they're buying today if they hadn't had a property to leverage and sell, right?
Exactly. I mean,
So,
what 25 to 35-year-old person, which is a lot of the people that I work with, if they didn't own a home already, can come up with 60 or $70,000 that is strictly for a home purchase. They
yep,
may have it, but if they spend that, they have nothing.
they have nothing,
And
right?
but I can tell you a lot of them that bought houses 4 or 5 years ago that grew, that didn't touch their house, didn't just lived in it, that got $100,000 in equity just living there.
Yeah. And, that's another thing that, I speak with a lot of first time home buyers and they have really high expectations, right? I'm guilty myself. I know a lot of realtors, hey, let me help you find your dream home. Well, what we're
Yeah, I
saying is
hate
high,
that.
high expectations.
Yeah.
Honestly, I look back and buying my first house, my plan, I want to turn it into a rental property, rent it out, buy another one. You can do the primary residence, minimum down, rinse and repeat that process kind of. Honestly, I'm like, man, if I were to do it again, I probably would have bought an even cheaper and not so nice, quote unquote, whatever you want to call it, house, because that would have been a better long term play because I could have cash flowed it. You know what I mean? So
Yeah.
I'm like, I was kind of picky on the house that I got. And with my plan, I was like, looking back, I'm like, if I were to do it again, I would have A, bought obviously sooner than I did, and B, probably would have bought at a lower price point just because obviously my goals are maybe a little bit different than others. But, with my goal of turning it into a rental, sure, I'll sacrifice a year or two or living in a house that maybe not be as appeasing to the eye as a higher price point because that's going to set me up. There's short term sacrifice for long term gain.
Yeah.
Um,
Which that there is, I'm a realistic person. I think that, you start listening to like some real estate investing podcasts and they're like tell you to live in a, camper or something to try to save money or whatever. I'm like, I'm not that person,
Me
but
neither. Me neither.
if
Which is
you're if
why I bought what I bought.
yes,
But,
but like if you're a person that, and it's really hard to do in today's market, one thing that, you hear a lot is like, oh, well, you should buy a duplex or buy a fourplex and then you live in one of the units and you do all this. Well, chances are, if you haven't bought anything yet, you probably don't have the money to buy a fourplex. Maybe, um, even a duplex in today's world, unless you're really buying one that like needs some help. usually is not your first time home buyer. Like, sure, you can get a low percent down, get into it with, a lesser amount of money. But, yeah, I mean, if you are coming out of an apartment or something anyway, and you're renting and you have people sharing a wall with you anyway, that's a great option. Like, why not if you can find one? And just to your point, the single family thing, like if you can find a small house and get into it, clean it up a little bit, live there for a couple of years, do it again, um, I can't tell you. I'm kind of in this boat personally right now. It's like I want to find something else to buy, but I get kind of wishy washy on it. And then I look at the couple investments that I've made in the past, and I'm like, why have I not been doing this numerous times over and over again? Because if I did, I'd be in a lot better position.
Yeah, and obviously, it's easy for us to sit here and talk about it, right? Until you actually, pull the trigger and do that.
Yeah.
But so, and I don't, want to just come across as, oh my gosh, unless you own a home, like you're a terrible. Not the case whatsoever, right? I mean, I rented for a long time. I was renting even when I got into the business, right? So like, I get that, financially, it made a lot of sense for me. It allowed me to save up and buy a house and things like that, right? So I do credit, that was a benefit for me personally at that
Yeah. I
time.
mean, where are you supposed to start?
100%, right? So, but also, to your point is, and I know this is very, it's hard to do this, but I always say, I like to ask people like, hey, have you ever asked like your mom and dad what the value of the first home they bought is?
Oh God.
And just be like, could you imagine if they still own that home and how much equity they'd be sitting on today and what they could do with that, right? And so, just having something that's working for you, right? You can tap into that equity at a later time, and you know again, there's nothing wrong with renting, but you don't get set yourself up for that in the future. You know, it's just like investing in a market, right? Like in the stock market. Yes, you have to pay more money to invest than if you didn't invest, but long term, just like you might have to pay more money for a mortgage at right now. Now, let's say fingers crossed. Let's hope rates maybe come down to 5%. I'd like that. And you can refinance and things like that to a lower payment. Maybe the rent and mortgages will be close at that point. But anytime you're set, nothing's going to come easy. Anytime you're setting yourself up for future, there's going to be some sort of give, right? Whether
Yeah.
it be you're putting more money towards a mortgage. Same thing if you're investing in the stock market. You have to put money that you would keep yourself to yourself and spend, and you have to give it up to invest. And I look at those, and I obviously encourage strongly, speaking with financial advisors and investing and retirement accounts, and
Yeah.
that's why I refer to real estate attorneys. POAs, wills, trusts. Like these are all things to protect you, protect your assets. Creating that family office, right? Having a Blake Hunter as a realtor, right? Huge asset. Having Dylan Dravland as a lender, right? Having or local, whoever your local person is, right? But have a team in place so they can set you up for long term success. I think that's the name of the game,
Yeah.
right? You don't have to know it all. You don't have to enter the market today. You don't have to enter the market next year. You enter the market when you are comfortable. But I think once you do in 30 years, you'll be happy you did.
Yeah.
And I even look back and I'm in the business and I'm like, man, I'm sure everyone would say it too, but man, I wish I would have bought a house. The joke is, what
When
is
you're in
it?
eighth grade?
Yeah, 2008, my parents were surviving the housing collapse and I'm playing Call of
Yeah.
Duty.
Yeah. Yeah. I should have been
So
buying
I should
houses.
have been buying houses back then. But, think
Well,
about it though. In 2008, doom and gloom, and the Warren Buffett quote is, be fearful when others are greedy. Look at what happened, man. If you were buying houses while everyone else the market was collapsing, you're getting fire deals. And 10 years later, you know what I mean? So that's
yeah. I
just
don't I
the
don't
way
I
my
don't
mind works.
know, a couple points. I don't know anyone that, obviously is older than me, but that bought a lot of real estate or bought some real estate in the past that ever was like, man, I really wish I hadn't have bought that. I mean, all of
It's
them,
true.
everyone that I know did well. Um, and it's just a time, the buy and the hold, and they're renting it out the whole time. And sure, there's a lot of work that is involved in that, and that's kind of the sacrifice you make. But you know, I I look at those people, and there's no regrets, and that's kind of the same point to what you're saying earlier too. Is sometimes you got to make some sacrifices in order to do those things. And I know in my life, when you're making them, it kind of sucks. But
Of
then when you
course.
get to where you're trying to go and you look back, you're like, oh, that was the right thing to do for
Well, it's
sure.
just, no different than going to the gym or eating healthy, right? I mean,
Yeah,
and maybe
not
I'll
that
speak
fun.
more to my personal self here. I hate going to the gym. I hate eating healthy. But if I want to live a longer, better life, I probably have to make some sacrifices, right?
If you want to
So
look good in Mexico this winter, you got one choice.
exactly, man. So, nothing easy, worthwhile comes easy. I think kind of to not beat that drum, but um, that's always what been my philosophy is. And it's not all roses owning a home, right? I mean, let's be honest. Homeowners insurance. Let's tell it
Not pretty.
like it is. It's in a insurance is in a tough space. People's insurance premiums are going up. I'm not going to hide from that fact. In fact, I am very transparent with all of my first time home buyers, and I'll pull up their property tax history on the house that they're buying sometimes, and I'll say, hey,
Yeah,
you can see what taxes have done here. I'm not going to promise you this payment today is going to be your payment for the next 30 years. Now, your
yeah,
principal and interest amount, that will stay 30 year, as long as you're in a 30-year fixed, that will stay the same until we either refinance to a lower rate, you sell, or obviously we maybe cash out, refinance, whatever. But I have no control over property tax and insurance. So that's a part of home ownership, right? Your payment can change.
mm-hmm.
I had a $3,000 plumbing expense within the first 60 days of owning a home. So I'm not, there are aches and pains of being a homeowner, 100%. Right.
Yeah,
As a renter, my washing machine broke. Sure. Call up my landlord and it didn't cost me a dime. But again,
yeah.
I
But it
have
might not get
no,
fixed for 2 weeks or
that's fair,
a
100%. But
month
at the
or
same time, I'm choosing home ownership 8 days of the week. Like
yeah,
even with, because those are part of to build that wealth that you want to build and
yeah,
to have $100,000 of equity down the road, you're going to have some, it's not just going to be roses, the whole time. So, anyway.
yeah. Speaking of insurance, I was talking to, I had a phone call with an insurance broker today, and I'm going to have him on the podcast in a couple weeks. And, one of the things he really preaches on social media and to his clients is the value proposition. And, I want to turn this over to you and kind of give you a chance to plug Neo and plug yourself.
Yeah.
Um, just to kind of wrap things up is like, he always tells people, look, I may not be the cheapest, but I at least want to have a conversation with you and I want you to understand what you're doing and what you're signing up for. And insurance is one of those things, I know that your world's a little bit different than that, but when people are shopping, but
Hmm.
insurance in today's world, especially people our age, I wouldn't even say especially people our age. I'd just say people in general, they're going to look for the cheapest quote, and they're not even looking at what they have covered. Um, there's no conversation around that. So he's really talking to people about, he's saying I'm having a video call with them right away and uh,
Yep.
informing them on what I'm going to do for them, and then also he is working. He's trying to pull those people into his network and hook them up with people that he would want to refer, loan
Hmm.
officers, real estate agents, whoever it is that he knows he can trust and that are also going to provide the value. And so, when people have value, the cost of those things, I don't want to say it's a hindsight, but it does, you quit looking so much at the cost when you realize the value that you're getting. And so I know for you, you're huge on education and showing people here's what it looks like in this, if you're going to go this direction, here's what it looks like when you go this direction. So can you give people just like a really brief synopsis of what it looks like when someone comes to you, they want to get pre-approved, and how do you and Neo kind of take them to the next step?
Yeah. Well, one of the biggest things we always say is advice over price, right? When was the last time you paid for something that you bought the absolute cheapest of and it was in your benefit long term, right? There's a reason you just like shopping for anything. There's a reason some things are much cheaper than things that are more expensive, right? Same with insurance, same with mortgage. For us, it's it's really easy for us as lenders to just sell debt. I can give you a cheap rate. I can get the job done, and then I'll wish you the best of luck on. No one teaches you how to. Sure, we can help someone be a homeowner and own a home, but how can we help them be the most successful homeowner, right? So that's where proactive advice and guidance over not only the 30 days to close, but over the next 30 years of their life, they're going to end up much better off. And I'll tell people right off the bat, and I'll kind of explain kind of my process of how I do it. But I said, if you shop around enough for lenders, you're going to find a cheaper rate. I mean, it might take you, you might, if you want to submit 20 applications, sure, but you're probably going to get 20 different rates from every
Hmm.
lender, right? But like you said, everyone's so hyper focused on that. And now, and I don't know if you have any of these discussions either, but I know some other realtors now, obviously with that whole NAR thing. I won't go into details on that, but now that's similar, I guess, kind of to our rate situation, right? Is well,
Yeah.
I see things online. Oh, I found a discount agent, right? They're going to do my sell for such a low commission. It's like, well,
Hmm.
you also get what you pay for. You didn't close on time. You have no one coming to your house. You have no one, you have no offers, right? There's, you and I, we've had a couple of for sale by owners where they're trying to not pay the, right? So I,
Yeah.
I kind of think that as well. But, yeah, for my process, we'll start with more of what I call a dreams and goals call, right? Let's talk about your goals financially, not just to buy this house, but, long term. Then I will meet either in Zoom or in person twice with every borrower. A pre-purchase consultation before they're making offers, and then on what I call a contract call once they have found the house and they're under contract, right? The pre-purchase consultation, that is where we are, removing the fears and anxieties of buying a house and educating, right? Hey, here's some benefits of home ownership, the long-term wealth. Here's how in this market we can have your offer stand out if it's a competitive offer situation, or like we've done temporary buy downs, permanent buy downs, how we're getting clients with rates in the mid 5%. That's all done in that pre-purchase consultation. But again, it's nothing. And the biggest compliment I'm able to get is when I have, repeat buyers that have bought multiple homes and they're like, I had no idea this is what like mortgage lenders could be doing.
Oh,
Because it's not
yeah.
really our job to, I mean, essentially our job is to close on a home. It's pretty easy. I mean, honestly, yeah, there's guidelines to know and things like that, but it's like, okay, yeah, I can quote you a rate and, I have a full team support staff to help me close the loan.
Yeah.
Um,
And we
but
never have to talk.
no, literally, I mean, you have online lenders that we were just talking about. Like, hey, you can go online and get get a pre-approval. Now it might not work out, but so again, it just comes back to the advice and the guidance and the proactive communication. Who's gonna call you once a year for an annual financial review, right? I do these in January. I actually got to do these before the end of the month. I got to hold up to my commitment because I tell every client I'm going to do it, so I I have to do it. But those are some of the most fulfilling calls, and I remember doing them last year. Um, I don't think one of my calls had any conversation around mortgage. It
Yeah.
was, what are you earning on your high yield? What are you earning on your savings account? At the time, now they're a little bit lower, but high yield savings were earning 5%.
Hmm.
I could have a borrower earning 5% more on their money in their savings account than before the conversation I just had. Like, that's a value add, right? Or I consider a value add.
Yeah.
I can connect you with a financial advisor. I can connect you with a real estate attorney that's going to set up a POA, will, or trust, right? Do you have life insurance on your house? You hear horror stories. Um, and Ryan Grant, who I know you've seen him speak, he's
Yeah.
one of our co-founders, and he always tells the story of someone that he closed their loan, said he knocked it out of the park, raving reviews, thought he did his job to his best ability, and 2 months later, borrower comes to him, Dylan, oh my gosh, husband passed away, you're gonna have to sell the house. He's like, oh, you have life insurance, don't you? Nope, nothing. And so he thought, wow, there's no fulfillment for him because although he did his job, quote unquote, right? So that's where we come in is, hey, unless you have someone that's proactively, you know, asking about life insurance, right? And we have a whole post closing process, and I have
Yeah.
David on my team that helps with that. I think he's now actually includes the agents on the email. I think you were on one of
Yep.
those recently, right? So
Yep.
he's asking for referrals for us. He's asking about life insurance, things like that. Then I'm also doing it once a year in January and the technology. So long story short, but it's just, that's what our, neo is literally Greek for new. We're trying to take a new approach and change the mortgage industry. We can't just be order takers. I want a 15-year I want a 15-year mortgage at this rate and I want this down payment.
Yep.
Sure, but most of the time, that's not in their best interest.
Yeah.
many times I have borrowers put less money down and it ends up bettering their financial situation, right? Maybe we pay off debts, maybe we look to invest that money, right? We don't just tie it all up in the house. That's how I've won a lot of business, especially from financial advisors. Um,
Looking at
so,
the big
so
picture.
yeah, the big pic, long term, like
Yeah.
let's not be so hyper focused on just an interest rate, but let's focus out on what's going to put me on the best path 30 years from now for me and my family.
Yeah.
You know, I'd rather be better off 30 years from now than just tell my buddies I bought a house and got the lowest rate.
Yeah. Yeah.
I mean, because, and that's a lot of conversations is, and I would, man, I would be flexing a 2.5% too if I had it and bought a house during COVID. I didn't, right? My rate's
Yeah.
much higher than that. But, um, I also feel like, hey, I'll pay a little bit more, and that's for anything, right? Um,
Mm-hmm.
in my line of work, I could probably give it a shot to sell my house for a sale by owner. I never would. I never would.
Yeah. Yeah.
And I
You
do this
know.
all day, every day.
Yep.
I would not sell my house for the same situation. Yeah, I got to pay a realtor or whatever it may be, 100% worth it.
Yep.
So I know that was long winded, but did I touch on
You hit it.
everything you were?
You hit it. You showed your value proposition, which that's all I was really getting after was what are you doing that, honestly, probably most aren't. I mean, you're going to get, and that's kind of the bad thing about real estate agents too. And why why we get a bad rap sometimes is they're like, oh, you're getting that much money. And this is, you just open a door for me. I sent it to you on Zillow and you open the door for me and then blah, blah, blah. I'm like, you're not talking about the good real estate agent. You're talking about, and it's with any occupation, that's the same thing. So, Dylan, I got to jump to the next one, but I appreciate your time. Thanks for coming on again and giving us your insight and wisdom. And I'm sure we'll see you in person sooner or later.
It's always fun, man. Thanks for having me.
Thank you.